first open up Bloomberg, and then you can just click that blue link that says click here to enter or to begin. Then right here, you can create a new login. So pretty straightforward. Since I already have a login, I can just go ahead and access it.
If you're on the library computer, Vince, you can just log out of the library. There's an automated public user account on the library computer. You have to log out of that if you're on the library computer.
And to do that, you click that red default button. That logs you out. Someone's already logged into a session. And then that takes you right back to that screen that I was on when I initially opened it up.
We just create a new login?
Yeah.
For yourself.
Exactly. And
it'll pay for anything?
No, the school already pays for it.
Oh, so they'll know.
Yeah. School's got you covered. So, so only one person has used Bloomberg before. So this is actually pretty good because you all hopefully will take something away from this session, and it'll help you going forward. Because I'd imagine most of you want to work in finance. So if you can know how to use Bloomberg before you start working, then you should be set. So the first thing I wanted to show, let me make sure it's big enough, is this Bloomberg Essentials screen. To get here, once you're logged in, just type BESS and then hit enter. And this screen just takes you to basically an overview of the different certifications that you can get on Bloomberg. So as per this class, we're going to focus on the Fixed Income Essentials video. But I think that once you get up and running, you should definitely start with these core videos. So they walk you through how to use the Bloomberg keyboard if you've never used that before, just how to get started on Bloomberg, how to use Bloomberg to access news, how to pull data into Excel. I'm going to show you that today as well, and then some other functionality as well. And once you finish these 4 core videos and one of the market sector videos, you'll actually get a certification. So that's another thing that you can add to your resume, which will look nice. Whoa. And I'll show you what the videos look like. I don't know, do we have sound in here, Bjorn, or no?
What's that?
Sound?
We forgot to check that. But I think it actually works on this podium. Let me see if we can get that to work. There we go, yeah, it works.
So this is the Fixed Income Essentials video. Hopefully it does load up. But essentially what happens is someone will be walking you through some fixed income functionality on Bloomberg, and then at the end you can take a quiz, and the quiz will be based on the topics that were covered in the video. What's really cool is the voice on this video is actually someone who was on my team when I was at Bloomberg. His name is Kyle. I don't know if it's going to load up properly, but so that means I'm old school at Bloomberg. All right, for the sake of time, there we go.
There it comes, right?
Yeah, but the sound is no sound. Yeah, that's fine though. I mean, this just gives you a.
Check the computer. Has the mute thing next to the time.
Actually,
Next to the time.
Good call.
Yeah, there we go.
That's going to be
Stay
super
down
loud.
to the bottom of the menu,
Yep.
and we'll click on the report
So-
and bond for bond. Clicking that, it loads.
But you guys heard it, right? I mean, okay. We're not going to spend too much time on
Now we
this.
have our top bond news.
Exactly. So Kyle is just walking you through fixed income news, and he goes through a whole slew of functionality, and then there's a quiz on it at the end.
You can customize.
Quiz is pretty easy, but you have to get a minimum score of 75%, and I think they give you 2 times to take it. If for any reason you take one of these videos and you don't get 75%, please email me so I can help you to make sure you get 75% going forward. All right. The next thing I want to start with is just some market overview screens on Bloomberg. So the first one I like to show, I know this is a fixed income class, but is the world equity indices, because I think that even if you're focusing on fixed income, you do need to pay attention to the equity markets. So to get there, you can just type WEI, and I typed at the top. You notice this little drop down that came about. This is called autocomplete. So essentially what autocomplete does is it allows you to type in a keyword and it'll find functions and securities that are related to that keyword. Since I already knew the function, I don't really need the autocomplete, but let's just say I didn't know it and I just typed in like world equity. Then you see that WEI function is the first option that shows up. So from there, I would just go and then click on it. And that brings me to the World Equity Index screen. So what this screen is showing me right now is just kind of the levels of the different equity indices across the globe. Of course, for the U.S., we're looking at the Dow and the S&P, and you see the current value, the change on day, percentage change. Right now, it's showing you the what is this again? The average value at time. You can hover over each one of these columns to get like a better understanding if you don't really know what the column header means. Another thing that's very helpful too is if you're on the screen and you don't quite understand what you're seeing, at the top you'll see one of these green buttons says help. You can click on the help and it gives you just a rough rundown of the screen itself, and you can type in keywords or you can just go through all the different sections so you can really have a better understanding of what you're looking at. All right, and then just do menu to page back. Again, I'm not really going to go over like the very basic functionality, like how to navigate the system. If you go to the Getting Started video from BESS, it'll walk you through all that. Another really cool thing about this screen is you can get more granular. So we click into the S&P 500. We can get a heat map of the performers within sectors and industries of this index. Right now it's set to look at the, I think I might be looking at GIC sectors actually, but beyond settings were for him to look at ICB sectors. If you click on 95, you can modify that so that you can change like the type of sector that you're looking at and just some other functionality on the screen if you want to change it. But again, now that we have this heat map, you can click further to really get a granular look at why a particular sector is performing the way it's performing. And then if you click enough times, you can get to the names that comprise that subsector. So you can see, which companies are really driving the performance. Another very good kind of high-level macro screen is, I didn't show this yesterday actually, is WB. And this is a similar screen, but it's for bonds. So this is world bonds. And this is just showing you for a given country or region the benchmark bonds for that particular region and their prices and yield levels. So right now I'm set to look at 10-year bonds across the globe. And you can see the bid-ask prices, and then you can also see yields, yield changes, and then some ranges over a 3-month time frame. So you can see how the yield, kind of the volatility of the yield movements of these particular indices or particular securities. If you click on a particular country, oops, I didn't mean to do that, click too fast. You can get a more granular look of the curve for that particular country. So right now this is just showing you the yield curve components for the US, showing you the yields and prices as well. And then you can also see curves, right? So, Bjorn probably talked a little bit about the shape of the yield curve changing. So some people look at the 210 spread or the 2.5 spread, etc., and you can see those levels as well. One last overview screen I'm going to show before I get into some kind of single security screens is ECO, which is for economic calendars. So if you just type ECO and hit enter, this just gives you a list of upcoming economic events. You'll notice it has the date, the time of the event. You can set up an alert so that it gives you like an audio kind of message that this release is about to happen, and it'll even tell you, what the consensus expectations are and whether or not, the consensus expectations were met. You can email yourself the alert. And another thing that's really important too is just this relevance column, right? Because there's so much economic data that comes out on a daily basis. How do you know what's important, what really drives the market? The relevance indicator is essentially showing you how many people on Bloomberg have set up alerts for this particular release. So the more people who have set up alerts, the higher the relevance score. So you can see, like, for example, today NFIB Small Business Optimism came out, but it only has 2 bars. Whereas, say, Wednesday, we have advanced retail sales, this has, the full amount of bars. So you can imagine that more people are probably paying attention to this release than that other release I showed you. And again, these columns show you the period for which the release pertains to, shows you surveys what the consensus expectations are, actuals what really happens, prior is what the previous release was, and then revision or revised is showing you if there were any revisions to the prior release. Because like for GDP, for example, you might get like one number when it initially comes out, but then it'll be modified down the line, and then this column allows you to see the modifications. So those are some of the high-level kind of, I want to call them macro-level screens. Any questions so far? Comments?
Like those little news things, you can just click on them if you want to do more.
On the bottom?
Yeah.
Yeah, and this is scrolling news. You can turn that off, but if you do have it on, you can just kind of click on any of the stories and, read them. And you can set up alerts and things of that nature too, so that you can receive the news in your Bloomberg email. Some stories, they'll allow you to send like the headline to a non-Bloomberg email address, but you can't necessarily get the full story because they want you to use Bloomberg. So that's a little kind of quirk in the system. Any other questions or comments so far? All right, so the next thing I'm going to do is kind of highlight how do you actually pull up a security on Bloomberg. So my friend, what's your name?
Chris,
Chris, do you remember how to pull up a security on Bloomberg?
if you know the ticker, can't you just put it up in the top?
Exactly. So if you know the ticker, you can just do the ticker, and then you can put the market sector, and then you can type the type of functionality you want to see, right? So for example, if I'm looking at an equity, what's a company that's in the news today? Apple. Okay, so we can just do Apple's ticker, right? And then you can just type, well, you can also specify the country, right? So you can do US, and then you hit F8 for equity, and you hit enter. So this kind of just loads up. The security is loaded because you see at the top, you can see the quote line. So you see the ticker, you see the price, and you can see some other data as well, like volume, open, high, low, close, etc. That's how you know the security is loaded. But how do you run, functionality on it? The first thing you want to do, I like to just look at prices historically, so you can just type GP. But if you didn't know that, you see here, there's a list of functionality that you can actually click on from here so that you don't have to remember all the mnemonics. So I'm just going to click on this one, GP, for historical line chart. And this just shows you the equity share price. It looks like Apple's been up a little bit more recently, but you can see they've just come down significantly from 700. But since this is a bond class, I'm going to show you how to pull up bonds too. It's a little bit different. So one thing that you can do, and this is pretty helpful going forward, is instead of you can type in the QSIB, you can type in the ISIN, you can type in ticker, coupon, maturity, but for treasuries, they made it a little bit easier. So for the on-the-run treasuries, all you have to remember is CT, the tenor that you want, and then F2, or the government key. So for the 10-year, for example, you could just type CT10, gov, and then we could do the same thing, GP. So now this is showing me a price chart of the 10-year yield, or the 10-year treasury. Price, yes. And you notice, again, that it's loaded because at the top you see the quote line. So this is the most recently issued 10-year. So its maturity is 11/15/22, which means that it was issued 11/15/12. The coupon is 1 5/8. So if you want to see yield, though, you see within this particular screen, you can change the time frame up top, and then the third column that says last price, you can click on that, and then you can change it. So you can change that to say mid-yield to maturity. And you can see the yield instead of the price. Notice too that there's a pricing source. It says BGN, that's my default. BGN is the Bloomberg generic pricing source. Bond markets are OTC, so there's not necessarily one market maker who determines pricing. So Bloomberg allows you to set up your pricing sources so you can reflect brokers that you get quotes from. But most times you can also just use a Bloomberg generic as well, which is an indicative pricing level, which means that these are not necessarily where the bonds or securities are trading, but it just gives you kind of an indication of where rates are or where prices are. So the one issue though with the, and you guys know what on the runs mean, right? Again, I think I just said it, but is anyone familiar with the on the run? Okay. So the issue though with that is, like, let's say if I wanted to see bond pricing from a year ago, any idea of how I might do that? No, right? Because you guys didn't know to use Bloomberg before. So we have generics as well, which string together the on the run. So this particular bond, again, I'll just pull up the description page. That's DES for description. We can see that it was issued 11/15/12, right? So I'm not going to be able to see data beyond that. So what Bloomberg does is they, not we, I don't work there anymore, is they string together the yields on all the historical and current on the runs, so you have a long time series. And the way that you can pull up those is similar to how you pull up the on the runs, but instead of CT, it's going to be GT. So, for example, if it's the 10-year, we do GT10 Gov, and then how do I see historical pricing on a chart? What was that function I just pulled up before? GP. Excuse me. So you see there's a more extensive history here, right? I can go back as far as I want to, really. So let's just put this to, like, I don't know, 2007. There you have it. You see that rates have come down significantly since then. But again, you can see that there's a longer time series of data that you have access to. Later on,
This is the yield,
yes, this is the
not
yield.
the price.
Exactly. For the generics, they don't track the price; they track the yield, because again, the price is going to reset to par every time a new on the run is issued, so that you have to get a better representation of where the markets are. They just show you the yields historically. So how about if I wanted to look at yields across the world, again, historically like this? There are generic tickers, and there are ways to pull them up. But what I like to show people is this one screen that consolidates them together and allows you to click on a particular country and then see its yield curve historically. And that function is going to be GGR for generic government rates. So yesterday we had a student who's from Canada, so I'm just going to click on the Canadian yield curve. But from here, you can see essentially the full tenor of rates, right? Everything from the 3-month all the way out to the 30-year. There's also some break-even rates. Does anyone know what break-even rates are? If you want to talk about tips and real rates yet? Nope. So a tip is a Treasury inflation protected security, and the yield on a tip essentially represents a real rate of return. So that means adjusted for inflation. So nominal treasuries, there's two components, right? There's like the real rate of return, and then there's an inflation premium. So if you were to take the yield on a treasury and subtract the yield on a tip, what's left over is the inflation expectation, right? So these break-even rates are essentially for a given tenor and for a given time frame, what the inflation expectations are as embedded in tips and nominal treasury prices. And then they also just have some inflation-linked bonds too. So these are, again, real yields. And everything that you're going to see here is in terms of yield, not price, because again, these are generics.
So this is Canada. Let's look at a different country which has been in the news a little bit, which are the Southern European countries. So let's look at, for example, Spain.
Spain. Any tenor you want to see?
Oh.
10-year? So yeah, the 10-year yield for Spain, it opened today at like 5.4%. Significantly higher than the US, right? We're like, what, 2%? So there's like a 300 basis point differential. And then again, you can click on one. And then this one is going to be a little bit different because a menu is going to pop up. Like this. And then if I want to see the historical price chart, I can just go to option 8. There you have it.
So Later on in class, we'll talk about what happens if you borrow in the US at 1.7% for the 10-year and invest in Spain at 5.5%. That's a popular trade. Call it carry trade.
Yep. So you borrow, you only have to pay 2%, but then basically loan, and you receive 5% and the 3%. Well, but you have to adjust for the currency difference, right? And then the difference is profit, essentially. So the next thing I want to do is go back over some fundamental things and kind of give you an overview of some of the things I used to do at Bloomberg, or just one example. So what I'm going to do now is just pull up the 10-year, current 10-year. How do I pull up the current 10-year again? Speak up. Yep. And then what market sector? Exactly, for government. So one thing you guys have done already is yield analysis, right? The first homework kind of had to calculate yield and for bonds and determine pricing, right? So this screen on Bloomberg is a shortcut to do that, so that you don't have to actually do it yourself. So from the screen, you can see the price, right? Settlement date, and then the yield, essentially. And these are different conventions. The difference with these conventions is just basically making adjustments to the day counts. So I think Bjorn might have told you, his assumption is that there's 365 days in a year and 182.5 days in one period, right? Well, there's some conventions where that would be different. There's some bonds that trade with a 360-day calendar, or it might be 360 days in a full year, but the way you count the days in the period is different. So these conventions basically adjust for that. And then over on the risk side is duration. We've talked about duration already, right? You don't know
I sure
yet?
did.
Okay.
Yep.
So you guys
All
understand?
about that.
How would you describe duration, just like for a lay person? It's interest rate sensitivity, right? So essentially, like, how much you stand to lose or gain if rates move up, right? So what I've done here at Bloomberg, how it used to work is, I was on the help desk, right? And I was a manager on the help desk. So sometimes clients would come in and they say, I see that price and I see that yield, but you know what? I don't really believe it. Can you back into that and prove it out for me? So a lot of times in Excel, we'd have to prove it out. For a bond like this, it's not hard, but sometimes when you have bonds that have embedded options or weird day counts, it can be kind of complex. But just for today, I've done like a quick example of replicating Bloomberg in Excel, essentially, without using any Bloomberg formulas. So this is actually from Sunday, so let me just pull it up. I have the right data. So I just used a yield of 1.7 at the time. Sorry, let me just do this one. So my settle date was the 11th, I believe. And I did a yield of 1.7. Anything tie up? Yep. All right, perfect. So from this Excel sheet, and I'm going to send this to everyone. I mean, this is pretty basic stuff, but I think it still just kind of helps you to get the fundamentals down. So what I did was I just took all the data about the bond from Bloomberg, right? I assumed the face of 1,000, coupon is 1.625. It pays twice a year. The day count is actual. The settlement date, this should be 2/11. Right, it was 2/11, matures that date. The yield I put was 1.7, and then the price I got was 99.327. So how did I do that? So I just set it up so that I can see, my payment dates, right here. Then I took the time in periods, right, not years, from settle to the next payment date. Now I have to tell you, Bloomberg, we do it a little bit differently. Beyond calls it cheating, right? So essentially what they do is they figure out how many periods in the first period, and then every subsequent period you just add one. Just so I guess it's even periods. And for the first period here, if you look at my equation, right, you see my denominator assumes 181 days. It was like, wait a minute, I thought it was supposed to be 182.5. Well, if you look at the last coupon date, which was 11/15/12, the amount of days from 11/15/12 to 5/15/13 is actually 181, as you can see here. So that's why I use 181. Because remember, the day count here is what? Actual. So after I do that, just add a 1 to each period. You know what your interest payment is going to be. There's no principal until maturity because this is a bullet bond. So you know what your future value is, right? And then I just discounted that, assuming that yield of 1.7%. And then you just add up all the discounted cash flows. That's the bond's price, right? Then I took it a step further and I calculated the duration. So to calculate the duration, I just took the time, and instead of using time in periods, I figured out the time in years from settlement to the next cash flow date. And then I followed the same pattern where instead of adding 1, I added a half because it's a half a year subsequently. Then I figured out the weights of each individual cash flow as a percentage of total cash flows or price. And when you multiply them all together and you add them up, that is going to be your Macaulay's duration, and that's measured in years. Then the next step is I just kind of divided by 1 plus the yield divided by the frequency, and that converts it to a percentage. So essentially saying if interest rates increase by 100 basis points or 1/4%, how much your price is going to come down by in percentage terms. Then we converted that to dollars, right? Because most people think in terms of dollars, not percent. So you can see for a 100 basis point shift in rates, how much the price is going to change. And then I just divided that by 100, so that for a 1 basis point shift, how much rates would change. I didn't calculate the convexity, but you guys are aware of convexity, right? And how it helps you with bonds. So essentially duration is assuming a linear approximation, right? But the price changes are not really going to be linear. So there's some adjustment that you need to make, and that's what the convexity adjustment does. And the way I've always thought about it is it kisses you harder than it kicks you. So when rates go down, your prices are going to go up more than they would, or the price change is going to be greater than when rates go up. That's a bad description. So when rates go down, prices go up, right? Duration is not telling you how really, duration is undercutting you. So your prices are actually going to go up higher than what duration is telling you. But then when rates go up, your prices are going to go down less than what duration is telling you. So that's how you can think about convexity.
We didn't spend a whole lot of time talking about convexity. I had one single slide on convexity, and we sort of briefly just referred to that as kind of the curvature of the bond, bond price as a function of the yield.
So that was that. Any questions? That was too basic. I apologize. I just wanted to make sure that I didn't go too fast, so I made sure that I went over stuff that I thought would be helpful for people who never used Bloomberg before. So any questions about any of the functionality you've seen so far, or you guys had any questions about anything that you might be able to do on Bloomberg that I haven't shown you? Because there's a lot. Like there's tens and thousands of functions on Bloomberg. So it's easy to get lost, but I think it's very helpful to use that help key that I showed you before, and then just use the menus, because a lot of times, like for example, if I just hit F2 and I hit enter, this will show me different functions for that particular market sector. So use that as a resource. And then the third resource really is the help key again. If you hit the help button twice, it opens up a live chat with my friends at Bloomberg. So if you ever have a question about how to do something, or if you don't understand what you see on the screen, or you want them to prove something out, they can do it for you in most cases.
Can you bring up that dialog just so we can see it?
Sure.
Click on help.
And then live help right there.
Live help.
And then
And this is the chat window. You don't actually need to do that, right? But if you actually needed help,
you could say that, right?
yeah.
I mean, we have time. I could show them, right?
Sure.
Why not? I mean, hopefully they could get this to me in like. That should be something that hopefully they can answer quickly.
it comes back up with a dialogue where it says,
Yeah, that's just the,
standardized response.
exactly, whenever you submit a question, it says that. They might be jammed too, because I don't know how busy they are in New York right now, but yeah,
Usually takes a little while for them to get back, but it's sort of,
because they cut
you
their
want to use
staff.
them when you're really stuck.
Yeah, they cut the staff more recently, I was told by some friends. So there's less people working on the help desk, so it takes longer for them to give you
Is
an
that
answer.
why Bloomberg was able to donate $1 billion?
I can't say that it's the reason, but I mean, I think his investment,
saving on the help.
he's making, yeah. And they're not training them as good anymore, since I've left.
I got him saying that on tape, you know that. Since you left, it's gone downhill.
I wouldn't say it's directly because I've left, but I think that there's a high correlation between the two.
Good.
There you go. And he told me to go to WB. And see, this is something that I knew that they should have a prefab answer for. So this is not even a person. This is like the Bloomberg algorithm. Since I asked such a basic question, they already have prefabricated answers. So again, he told me to, do this stuff or go to WB. So we're good. So if you have questions, most times they can help you. And if you really get in the jam and they're taking this long, just say, can you please put me through to a specialist? And then they'll put you through to somebody who knows what they're talking about.
Suppose I have a really complicated question.
We have advanced
I have an
specialists.
advanced question. Suppose I wanted to ask them, how do you compute option-adjusted spread on a mortgage-backed security? And I have a question, because I know that the question is complicated, because the answer depends on what sort of models do they have running around in the background that computes theoretical prices for me. And to answer that question, you really have to be an expert. What happens?
Well, you don't necessarily have to be an expert, because I was not good at mortgages, but I could probably answer that question. Not right now, but they have white papers essentially on Bloomberg that you can give to clients. So I might not be able to fully understand what's in the white paper, but I can say, generally, this is how they calculate in the OAS. If you want more details, here's a white paper that gives you the complex calculations of how they derive it, and here's the function that you can use that uses this model. And then usually that would suffice, but then if a client has a more specific question, then we'd route it to an advanced specialist, which is somebody who has market sector specific knowledge at a very high level, or we can send it to application specialists, which are people who used to be practitioners but have since retired and are working at Bloomberg and just living a cushy life, so they can help out. But it all depends on who you initially get on the help desk, because if you get someone who doesn't know how to use their resources, then you might just get a wrong answer or someone to tell you that they don't know how to help you. But in most cases, I would say 8 times out of 10, you should get an answer. This kid fell asleep during my presentation. It's all good.
Vincent,
Yeah.
can you, is there an option to show the increase in equity as compared to its industry on the same screen?
You mean just, yeah. I mean, let me just try to think of the best way to do that. So basically, relative performance is what you want to see, right?
Right.
Just about price appreciation and total return, whatever. Total return, right?
Total return.
So let me just see. I think it's TRR. I can't remember the function offhand. TRA maybe? This might do it. Well, you know what? There's this thing that's called RV. There's so many different ways to skin a cat in Bloomberg. I think this is just showing you the total return of the equity. Not is absolute, not relative return. I think if we do RV, I think that this gives you relative return. So you can see how the stock has performed relative to its peers. But these are Bloomberg peers. You know what? Stop buying office hours, because I could probably figure that out, but I don't want to take too much time from class, because I'm better at the fixed income functionality than the equity functionality, but I could figure out the answer.
Who cares about equity?
Let me just write that down, though. Oh, by the way, this week I'm traveling tomorrow, but I'll have office hours on Thursday evening from 5:30 to 7:30 in 3540, which is the ASAP the Hawk Center for Applied Securities Analysis. You guys know what that is? Okay, so stop by, and we can go over some stuff like that. All right, so we're doing pretty good for time. So the next thing I want to show you, though, hopefully this doesn't put you back to sleep, is how to do some stuff in Excel. Because I think that, again, is one of the most powerful features of Bloomberg, is that you can pull a lot of the data that you see in the screens into Excel, so you don't have to be as dependent on going to the terminal. But you will need to be at a computer that has Bloomberg in order to use this functionality. So the first thing I want to show you is what we call the BDP function. So BDP, or Bloomberg Data Point, you can see it, right, is the functionality we use to pull a single current data point into Excel. So let's just say you want to pull in, the price of the 10-year right now into Excel. You could do that with the BDP formula. The syntax, as you can see here, is equals BDP, the security, which in Excel you have to do the ticker and the market sector, and then the field. So field is basically a call for the data that you want to pull in. So I happen to know that the field to pull in the most recent price, static, not updating, is PX last. But in order to figure out fields, you just need to go pull up a security. Let's just do CT10 again, and then go to FLDS. FLDS is our field search tool. So I can just type in, once I have the security loaded, I can just type in the type of field I want. So if I wanted to pull in price, this will show me all the fields that Bloomberg has related to price. And this, of course, column shows you the value. So you can just kind of figure out which field you need to pull in the data you want. So right here, I want it PX last. And if you're not sure of what the field is actually pulling, you can click on it, and then you get a description of what the field is actually doing.
So is there an indicator for whether or not the field is in
Real time or static? At the end of the definition, it'll tell you. Let me just pull it all the way down. So right here, current, well, no, that doesn't tell me. One sec.
If I go look down the list there,
Well, I just know anything that has PX,
it's not-
anything that's yellow is not going to update. But if it's in white, it's going to be real time.
Oh.
Another thing that you can do is if you only wanted to search for real time fields, you can come to where it says field type, and then do real time only.
Alright.
So the real-time equivalent to PX last is last underscore price. The underscore is an optional parameter, and so you can just put a space. But that's the real-time equivalent to PX last. All right, so who wants to walk me through creating this formula? What's your name with the green jacket?
Jack.
Jack? All right, cool. We're going to do it together. So I'll give you the first thing. Equals, right?
Yeah. And then you're trying to pull data from the government 10 bond?
Yeah.
Okay, so then BDP,
Mm-hmm.
then GT10 go.
Yep. And the thing with the formulas is that you can hard code it, meaning that I can actually write it and put it in. If you're going to hard code, you're going to have to put the text into quotation marks.
Yeah.
But you can also just do a cell reference, which is the easier way about it. So
Do you have to put the GP like you did in the search function?
You don't.
F8? Okay.
No.
So then comma and PX last, PX underscore last, I guess.
Yep. There you go. And this should match. You know what? Yeah, hopefully I won't mess up like I did yesterday. But it should match. So if I pull up CT10 gov and I type Q just for the quote, it's going to be 96-30. Oops. Right? So let me just type it again. 96-30 and 3/4. Rough approximation, but if you want to see that quote in decimal terms, you could just type CV, and it was 96-30, and it was 3/4. I'm not going to be able to put the 3/4, but There you go, 96.9375.
So Bloomberg can divide by 32?
Yes,
That's
it can.
Now, let's put in the
actually, in this-
real-time field
Yep.
instead. Let's put in last underscore price. And this now is updating in real time.
Yes.
As you can tell, it just changed. Real time in, here at the university means 15 minutes.
Delayed, because you have to pay for real time. But it will tick. So it's 15 minutes delayed, but it's going to keep ticking and update. That's the third one. So the prices that you see here should be close. The only difference is, again, I ran this at one time and I ran the screen at a different time, but the pricing should be exact. So that's BDP. The next one I'm going to show you is to pull bulk data. Bulk data essentially is a list of information. So for example, on Bloomberg, that's the help desk. I bet they're asking, is there anything else I can help you with? Yep. So you see this little rude thing called thinks I'm done? That to me was the rudest thing. I hated when they introduced that. So like you would help somebody, and then without even really like saying thank you, they click thanks I'm done. It's just like thanks, man. Especially if like you did a hard prove out. Okay. But going back to the bulk data set. So on Bloomberg, leave me alone. On Bloomberg, we have tickers for indices, right? And you can pull the constituents of an index via the BDS function formula. So right now what I'm looking at is the index ticker for the yield curve, the US yield curve. And I'm using the field curve members to pull the members. Now I'm going to try to pull the data, but I remember yesterday it wasn't working. It froze. So I might have to just Control Z this if it doesn't work. So the formula, can I get another helper? No one volunteers. I'm not afraid to call on you. Yeah.
And then, equals BDS.
Yep.
And then you can just select cell B6.
Yep.
Comma, and then B7.
So yesterday it hung, and it just stayed like that. And it's doing it again today. I don't know why it does that.
Try it again.
I mean, write it again. It's weird. Sometimes it does that. I think what I might have to do is like close and reopen it. But since I already,
Well, it's working, see?
it's saving. I don't know if it's working. Okay. Okay. Now what I'm gonna do. So I just brought it back. But trust me, the formula that you see right here is just that. You'll notice though that there are some additional parameters for the columns and the rows. Bloomberg automatically updates that for you. So if you just do equals BDS, the security and the function or field you need, it knows how many rows and columns of data to pull. The second step from what I did here is, okay, so once I had the constituents, the really cool thing is the information is dynamic. So since this is in a format that Bloomberg formulas can recognize, I can use these securities now to pull additional data. So once you have the constituents, now you can pull the yields, right? So I'm looking at the bid yield for each constituent, and I'm using a BDP formula for each. So again, that just goes to show you some of the complexity that we can get into. This is not even a very complex formula, but you can see you can kind of embed formulas within formulas on Bloomberg, within Excel for Bloomberg. So it just adds to a higher level of, I guess, being able to really, use the data in a flexible manner. And then the last one that I'm going to show you. I'm going to
So
erase
why would I
this.
want to use BDS instead of BDP?
BDS is to pull like constituents. So if you have like an index, if you want to pull the
There's an
members,
index. Suppose I wanted to find out what are all the issues in the S&P 500 index.
you can pull the members.
Okay.
Let me see.
How about the Russell 2000?
Yep.
I I get 2,000 stocks.
You would. So like the other day, interestingly enough, this is not bulk data, but I pulled all the members of the Merrill Lynch index. So it was like 4,000, and
that's the
it let me
index
do
that
it.
you and the fixed income team was
We-
benchmarked against.
No, we're been to the City Big,
Oh, yeah, that's right.
but the City Big constituents are not in Bloomberg. So I just use Merrill as a proxy, so we can cherry pick the best performing bonds out of that index and then maybe put it in our portfolio. Just a thought.
Let me see how this thought process works again. You pulled all the members from this index, which
Yep.
you think is very highly correlated with what you guys as portfolio managers are benchmarked against.
Exactly.
Now you're gonna take the best performing bonds. What does that mean?
So we can look at, well, the bonds that we think will perform the best or have like the best characteristics.
Okay.
So let's say within a given industry class, right? Like I'm looking at consumer discretionary and I see, 10 bonds there. And I look at the credit ratings, like break them up by credit ratings. And then within a given rating class, I say, hey, I like this bond better than the others in its rating class and within its sector. I can say, let's add that one to the portfolio because I think it'll outperform. So one way to outperform a benchmark is to pick the best bonds within the benchmark, and then you can generate alpha that way.
If you think that you know what's better than, or you think you know that one bond is better than another bond, but that's an assumption, right?
Exactly, and that's not just based off of looking at pricing levels and maybe spreads, but you got to do more fundamental work, right? So I got to look at fundamentals, I look at like coverage, look at leverage, look at liquidity, look at what management has done and said, and whether or not I think the company's credit quality will improve relative to its peers. And then if I think that's true, then I would say it's better. And then I'd say let's add it to the portfolio.
Okay.
In the real world, money managers don't make their job more challenging. Like, it seems like you're making your job more challenging.
How so?
Because you said you're cherry picking the best performing bonds against the index that you're using. So
Yeah.
you're only selecting the highest performing bonds, and then you have to beat them. Are you saying you're selecting the best bonds to put in your portfolio? Or you're
Yes,
selecting the
to
best
put
bonds
it.
to benchmark against.
No, to put them on
No, see,
portfolio.
they're benchmarked
Yeah.
against the benchmark.
Yeah. So the benchmark has all of them, and some of them suck, right? So
Yeah.
the benchmark might have bonds that are terrible, and I'm like, you know what? Well, I'll just pick the ones. I'll exclude those and pick the ones that are better.
I thought you were
Yeah.
benchmarking against.
Oh
the
no.
others, so-
Then exactly. That defeats the purpose. I would want to benchmark against the sucky bonds, right? So I can easily beat them.
Right.
But yeah, we've been generating alpha through our corporates, but that's for now. Like spreads are very low right now, so I think we got to watch it. Sorry to go off on a tangent.
So again, we're going to talk more about this later in class, right? How do we think about corporate bonds versus other bonds?
Yeah. So the last one I'm going to show you before I open it up again for questions is BDH, which is for pulling historical time series data. So you can pull historical time series, meaning data from say January 1st through today, or I can pull a historical single data point. So if I wanted to see bond yields on October 31st of last year, I can do that as well. So I'll show you how to do that. Let me just erase what I have here. Start over from scratch. So first, I'm just going to show you how to pull a single historical data point. That's pretty straightforward. Let's see. Okay, I'm just going to use GT10. Let me get rid of this guy. So in this cell right here, I have BDH, right? Then I have my security, field, start date, end date. That's the syntax for the BDH formulas. So since my start date is equal to my end date, it's only going to pull 1 point. Now, if I change this to 2/11/13, you see the data fills all the way down. Not only does it fill, but it also tells you the date. I guess my presentation really sucks. I'll step it up next time. So I pulled, basically a month and a half worth of data. The other thing that's pretty cool is you can add these optional parameters to your formula. So let's say, for example, if I was comparing two bonds, right? Corporates, they may not trade on the same days, right? Because corporates don't necessarily trade every day. And if I wanted to compare spreads on those bonds to each other over time, what I could do is make it so that I have a full set of dates for each. So there's no gaps. So instead of like one might trade 1-1, 1-5, 1-10, 13 of course. The other one might trade like 1-2, 1-6, 1-8. But to make it so I can make an apples to apples comparison, you can add these additional parameters. So the two parameters that I use the most.
Can you just refresh, what did you just click on right there? Did you just?
Oh yeah, sorry. Thank you. Sometimes I don't even realize I'm doing stuff without explaining. So I clicked on the formula, the insert function, on the cell that has the formula in it, right? So then I just click here. So you notice from here, it has security field started end date, right? The same kind of parameters I already set. And it also automatically put in the columns and rows. But you can click on an empty option and add additional parameters. So I'm just going to give you an example, right? So I click on option 2, and then this little bar opens up. And I just know that if I want to make the days the same for both, I can just go to days and then choose A. Okay, so now we have the same days, but what is it going to fill in for the days where one trade and the other one
The
doesn't?
same as what? You only have one security in the background there, right?
Yeah.
You have the generic 10.
Yep.
We're going to compare that to.
You want to add another one? All right, I'm going to close out of this. I'm just going to do 2 corporates because then that makes the example a little bit better. I'm going to change this. Don't worry about the field. I'm just going to change this to a yield field. So YLD CNV bid, right? And I'm going to change this to DIS 7 Corp. Cool. All right, now I need to pick another one. Let me just go. Can't think of a bond at the top of my head right now. Let me pick another Disney bond. Oh, and to pull up corporates, similar thing, sticker coupon
Disney
maturity.
bond. Let's look at the spread on 2 Disney bonds. I bet you that thing is
Yeah.
gonna
So that's what I'm trying to do. I'm trying to find a different one.
Which is why sometimes when things are not that different, they're kind of interesting, because if they're trading off, if the yields are different on the 2 bonds for whatever reason, that
It might be a
represent an
mispricing.
opportunity, right?
All right, let me just get this one. And again, don't worry so much about what I'm doing here. Just worry about the end result, which is looking at the spreads. So I just took the Q-tip for the ISIN. Oops, both. Add corp to that. I just forgot to do it. All right, cool. So now I have the yields for both, right? But you see the dates are off, right? This one traded on the 3rd and this one traded on the 4th. So then I go back here. And I go back to my free option. And then I just drag this over here. And go back to days. And then make that A. So it'll show all days between the two, my start date and end date. Then I click on the next free option. All right, scroll down a little bit. And then, so like I said, it's going to show me all the days, but what is it going to put for the days where it didn't trade? So what I like to do is just make it fill in with the previous value. So the value of the date closest that has the trading value. So fill equals P. And then just hit OK. There you have it, right? So I can do the same thing with this one. You can even do it within the formula itself if you know how to. So you guys all know how to now. So you just type days equals A in quotations, comma, fill equals P.
I think you made a mistake. Days.
Oh, I did it. Yeah, I see. There you go. So now all the days are the same. And then when there are like days where it didn't match, they'll just fill in the previous value, like here, right? And then now what you can do is just take the spread. Right, so equals this, actually, 'cause I like to put things in terms of basis points when I'm comparing, like yields or spreads. And just multiply it by 100. There you have it. And then you could chart that and just look to see if there's, particular mispricing, like if the current value is below, like say the average for the period or something like that, then you can say, I might want to look into this further. That could imply maybe there's a mispricing. But I mean, really the point of this is just to show you that, you can pull a lot of data into Excel. You can manipulate a lot of the data in Excel. And this is really just kind of like the tip of the iceberg, because there's so many different things you can do. For example, you can do almost like a scenario analysis, right? Where let's say you have a bond, it has a current, its yield is where it is and its price is where it is, right? But you can say, well, what is the price going to be if I change the yield to X? You can do that in Excel. You can do an override for the yield and get it back into a new price. I'm not going to show you that today because I don't want to confuse you, but just know that there's so much that you can do. So make sure you go through those videos I showed you in the beginning on BESS, and there's some tutorials as well. I didn't show the other class this, but if you go type API into Bloomberg, and this also gives you an overview of how to pull data into Excel and a lot of the templates that they have. The templates are really helpful because a lot of times you might try to recreate something from scratch that we've already done, so it just saves you time. So this is a very valuable resource as well. And then from Excel, there's also a wizard which can teach you how to pull data as well. So you click on this. If you go to Excel, you click on Bloomberg, and then you click on the real-time historical option. This pulls up the Bloomberg Data Wizard, and you can see, there's formulas for pulling in historical end-of-day data. There's formulas for pulling in current data, bulk data. We didn't talk about intraday data, but you can even pull in intraday data as things are ticking throughout the day, and it'll actually record each tick in Excel for you. So the data that you can actually have access to is very powerful.
Can we do an example of that?
Sure.
We got about a couple of minutes left.
Sure. Let me
Entertain me.
Let me just open up a new what do you call it? Sheet. So just go to, I'm going to do the bar. You want to do bars again? We did yesterday?
Yeah, if you do like a 5-second updates or something.
Oh, so you want to do ticks then? Because the bars are going to be in increments of only like minutes.
I'll do ticks.
Okay. So let's do the ticks. Let's do 10-year. So you type in the security and identifier thing, then the market sector, then you click add, and you go next. Let's take trades, right? And let's do, from open today to now. And this is these are some more additional parameters you can set. So I guess you can show the type of trade it was, like the side of the market, if it was a buy, sell, etc. So the price, size. So I'm just going to leave those three that will click there. Click next. So this is just basically making sure that I have it set up to enter the right part of my sheet, right? If I wanted to enter on an existing sheet or a new worksheet, etc., and it's going to label the data. So I'm just going to click finish.
And is this not gonna this is gonna give me historical data, right? But it's not gonna tick into the sheet as the trades happen.
I think it will. Well, actually, no, that was historical intraday that we clicked on. What the hell just happened?
Oh, it's generating, it's
Is
still
it?
working on it.
It should automatically do it, shouldn't?
I think it's still working. You just don't understand how slow this is.
Or maybe I don't know to use Bloomberg. I mean, I'm just gonna try it again. Should have been pretty quick. Okay. There we go. Either way, if you try it on your own in the library, it's going to work. You know why it's doing that? It's building anticipation so that when you guys go back to the library and you set up your own Bloomberg, that you can do it on your own. Yeah, it says it's generating Bloomberg formulas, so maybe it is taking time. I mean, maybe there were a lot of ticks, I guess. But again, it just shows you that there's so much data that you can pull, and there's so much data that it takes Excel forever to actually pull it for you sometimes. But is there anything else I can go over, or is there anything confusing if I can revisit any of the formulas again?
For setting up these Excel sheets, I mean, like, what do you have to do with Excel to like be able to use it all? Do you have to do an add-on for Bloomberg?
Yeah, the
Is that
Bloomberg
just not
add-in
going back to
should already be on the computers in the library that have Bloomberg on them. But if you're away from that Bloomberg terminal in the library, you won't have access to it. So, yeah, Bloomberg, you know, their data is proprietary, I guess, in some sense. So if you're going to have access to it, they want you to pay.
Well, like these sheets that we have a couple from, I guess
From Beyond?
this one.
Mhm.
So like, can we edit our formulas and everything just off the Bloomberg terminal?
Yeah.
I guess that's what I'm trying to say. Like,
Exactly, yeah, you
if we know
can.
our formulas, we can construct our sheets
Yep.
away from the Bloomberg terminal and then go on it.
But the thing about it is that you might embed the formula, but you won't be able to see the underlying data. So you'll have a formula and it's going to give you pound name. And then when you get to Bloomberg, then you'll actually see the data.
Right.
So I don't think you're actually supposed to do this, but on the Bloomberg computer in the library, I think
You might
lots of
wanna
people are storing
turn the video
files
off.
on the computer. So when you open up a spreadsheet or you make your own spreadsheet, you know, you can store it there. Of course, there's no guarantee it's going to be there next time you get back, so you have to make it.
Just put it on a flash drive.
Exactly. Like if it works on the library computer, you just want to keep it, save it. I mean, it's not going to work elsewhere, but still, if you want to just have your sheet for later, yeah, email it to yourself or save it to a flash. So was this helpful? You guys feel empowered to go create your logins and get started? There's gonna be a couple questions on homework, so I'm not gonna try to ask you questions that are very confusing, but still, just go over this stuff again. And if you do have specific questions, make sure you follow up with me.
So one of the changes I made to the spreadsheets this year, as you recall maybe, is that I changed some of those fields. So I'm still using the BDH function, or BDP. Most of the time, my spreadsheet is using BDP almost exclusively. And I just made sure that I changed the fields to like bid, which is a real-time field, versus px_bid, which is a static field. The real-time fields, by definition, right, update in real time. And that's cool, right, because we can have an idea about what's happening right there.
Yeah. Some other cool things you can do on Bloomberg too. Like there used to be like this GPS function. I can't remember it now. But you could also like go on ESPN. So we'd be at work sometimes and just like just check the scores and stuff. I mean it's a web browser in some sense. But yeah.
Can you get CNBC?
I don't think so. You could try.
Only ESPN.
I mean, they let you get like news from CNBC, but they're not going to broadcast the video. But you can watch Bloomberg on this too. If you type BTV,
Or do you have Bloomberg TV analyst, right?
Does not exist? What? Maybe it's live, yo. Yep. Okay.
The second one,
So yeah, you can watch this kind of stuff.
No, but they have the Bloomberg TV, they have a live.
Yeah, this should be a feed.
Yeah.
Well, before it used to be BTV, but you know they probably changed it. Oh, maybe it's AV now. There it is. So yeah, we would have this up all day, but you wouldn't really be listening to them anyway. I don't really like listening to pundits. I just rather read the news.
Yeah.
They have some attractive people though.
People?
Goes both ways, right? I guess. So. Yeah. All right, I'm just gonna shut it down.
Let's see, the one thing that we couldn't make work, right, is the
Intraday ticks.
intraday tick data.
Yeah, it's
And
still
so let's see if we
thinking.
can create a kind of a spreadsheet that we can distribute.
Okay. With the
That'll be
intraday
fun,
data.
right, with some intraday data. And the idea is to have it ticking,
Yeah.
and storing.
Yeah.
That's
It
cool,
should
right?
be able to, like, every time a new tick comes out, then you get a new line on your sheet. So
Right.
that's how it should work. I don't know what the hell's going on with this thing. I'll play with it and figure it
I
out.
have now talked to the library and asked to please get a new computer.
They're gonna do it?
Like
Probably
everything
for-
else, it'll take a year.
Probably next year, he doesn't say.
Maybe we
So.
can put together a fundraiser.
No, we don't need to do that.
All right, but thank you guys for your attention. I appreciate it.
Thanks, Vince.
No problem.